Hello, good morning. Thanks for starting your day with us. You're watching The Market and this is, you're watching Market Café and this is ET Now. I am Snehisha and with me is my co-anchor Shreyansi Singh. Shreyansi, wishing you a very good morning and well, I am slipping into the holiday cheer because the US markets are closed today on account of Thanksgiving, but take us through what the markets did yesterday.
Absolutely. So very interesting trade yesterday. When you look at stocks, they rose after yields briefly fell to their lowest level in 2 months. And the November market rally broadened into the Thanksgiving holiday. Now the Dow Jones Industrial Average gained around 184 points or just about 0.5%. When you look at the S&P 500, that also climbed 0.4%. Nasdaq Composite advanced nearly 0.5% as well. In fact, the breadth of the market rally is also widening at this point because more than half of the stocks trading yesterday on the New York Stock Exchange were up. When you look at the tech-heavy Nasdaq, that also saw greater participation. So all in all, the breadth of the market rally is definitely widening. Now, when you look at the small and mid caps, you're looking at an outperformance with the small caps rising around 0.7%, mid caps rising around 0.6% thereabout. Now, when you look at the yield on the 10-year treasury, that briefly fell to its lowest level since September 2022. Now, it later recovered and that was last little changed at 4.4%. In fact, the major averages are also all still on pace for monthly gains. Meanwhile, the Nasdaq has rallied 11% in November. When you look at the Dow, that has also advanced around 7%, S&P 500 up more than 8% during this month. Now, meanwhile, the energy sector, when you look at it, has some interesting moves coming in because it did lose 0.1% despite the market rally. And this was after OPEC delayed a meeting on production cuts originally scheduled for the weekend. Oil-related stocks like Marathon Oil, EOG Resources also closed lower.
Absolutely, and let's talk more about what's happening with oil because we did see a lot of action yesterday when it came to both those oil counters, WTI as well as Brent crude. Now, crude prices declined Wednesday after the Organization of Petroleum Exporting Countries, OPEC, like Shreyansi mentioned, delayed a pivotal meeting on production cuts that was scheduled for the weekend. Remember, this weekend was scheduled for the 26th of November and has now been pushed to the end of the month, next Thursday to the 30th of November. Now, the WTI contract for January fell above 5% intraday yesterday to $73.8 per barrel in the morning, but managed to claw back most of those losses. So, WTI crude ultimately settled at almost $76 a barrel. On the other hand, you also had Brent because Brent contract for January fell 49 cents or 0.6% to settle just above that $80 per barrel mark at $80.6 per barrel. That's where Brent has settled at. Now, OPEC said in a statement that the meeting of energy ministers is delayed until next Thursday. The organization, however, did not provide a reason, but Saudi Arabia is struggling to convince Angola and Nigeria to accept lower output targets. At least this is what reports are saying. Now, there was a growing anticipation among traders that OPEC and its allies called OPEC Plus might implement additional production cuts, which pushed prices higher late last week and early this week as well. So, well, lots of action when it comes to oil. They did drop quite a bit yesterday, but managed to regain all of those losses as well.
Absolutely, and there's a lot of events to keep your eye on. Now, like you mentioned, Thanksgiving holiday, US markets closed today, and when you look at ECB, that also published account of MPC. Now, in terms of corporate action, there's a lot happening because you do have the weekly expiry. Lock-in period is ending for counters like Pyramid Technoplast. For TCS, it will be the last day to be buying it for buyback eligibility. So that counter would definitely remain in focus, along with Narmada Valley. For the same reason, last day to buy to be eligible for buyback. In terms of IPO action, you do have Ireda that is closing for subscription. In terms of other events, definitely keep an eye out for Rajasthan state elections as well.
Alright, with that, let's shift focus to some of the global stories that we've been tracking for you this morning. And the first news we're getting for you is from Gaza because now we're seeing a ray of hope coming in after war-torn Israel and Hamas have struck a deal for a humanitarian pause in Gaza stretched over 4 days. However, last night, Israel's national security advisor released a statement saying that hostages were not going to be released until Friday. Remember, the deal includes release of 50 civilian women and children hostages.
Well, a ray of hope that was long overdue, but the British Finance Minister Jeremy Hunt announced tax cuts for workers before an expected 2024 election, a 2 percentage point decrease in the rate of social security contributions for employees. The bigger than expected cuts will be rushed in to start in January, giving an early boost to PM Rishi Sunak's Conservatives, who are lagging behind the opposition Labour Party in opinion polls.
Well, shifting focus to the United States, where the number of people filing for unemployment benefits fell more than expected last week. Now, weekly jobless claims are down by 24,000 to 900,000. However, the view on the labour market does not change. Lofty interest rates cool demand in the economy.
Well, sticking with the US then, a vehicle exploded at the US-Canada checkpoint near Niagara Falls, killing 2 occupants. The mishap triggered border closures, sparking security alerts ahead of the Thanksgiving holiday. New York governor, however, has ruled out terrorist involvement.
Well, during the virtual G20 summit, PM Narendra Modi emphasized on the need for an inclusive, ambitious, action-oriented and decisive G20 group. He addressed issues in the West Asian region, expressing hope for the release of all hostages in the Israel-Hamas conflict. He also pressed on the need to monitor the negative use case for artificial intelligence amid the rising deepfake elements floating around the world. Let's go across and listen in to PM Modi sharing how the misuse of AI needs to be monitored and fixed. Listen in.
एआई के नेगेटिव यूज को लेकर चिंता बढ़ रही है। भारत की स्पष्ट सोच है कि एआई के वैश्विक रेगुलेशन को लेकर हमें मिलकर काम करना चाहिए। डीप फेक समाज के लिए, व्यक्ति के लिए कितना खतरनाक है, इसकी गंभीरता को समझते हुए हमें आगे बढ़ना होगा। एआई शुड रीच द पीपल एंड इट मस्ट बी सेफ फॉर द सोसाइटी।
Well, also listen into what the PM had to say about the recent release of hostages in Gaza and how he's optimistic about the recent deal.
पिछले महीनों में नई चुनौतियां उत्पन्न हुई हैं। पश्चिम एशिया क्षेत्र में असुरक्षा और अस्थिरता की स्थिति हम सब के लिए चिंता का विषय है। हम मानते हैं कि आतंकवाद हम सभी को अस्वीकार्य है। सिविलियंस की मौत कहीं भी हो निंदनीय है। आज हुए हॉस्टेजेस के रिलीज के समाचार का हम स्वागत करते हैं। उम्मीद करते हैं कि सभी हॉस्टेजेस जल्दी रिहा हो जाएंगे।
Well, at the G20 virtual summit, PM Modi emphasized the need for vital reforms to enhance the global economy's size, effectiveness and future readiness. Also listen in to what he had to say on that.
G20 ने प्रो प्लैनेट अप्रोच के लिए मिशन लाइफ यानी लाइफस्टाइल फॉर एनवायरनमेंट को मान्यता दी है। 2030 तक रिन्यूएबल एनर्जी को 3 गुना तक ले जाने का आह्वान किया है। क्लीन हाइड्रोजन के प्रति प्रतिबद्धता दिखाई है। क्लाइमेट फाइनेंस को बिलियन से ट्रिलियन ले जाने की जरूरत को पहचाना है।
In fact, my colleague Sumita Karir is standing by with more details on this. Sumita, help us put this into perspective.
Right, Prime Minister Narendra Modi was addressing a grouping of the leaders of G20. It's clearly the winding up of 1 year of India's presidency as it now passes on the baton to Brazil, which takes over the presidency from December 1. So what did the Prime Minister really talk about during his session? He said that India cannot forget the moment when the African Union was incorporated in the G20. He said that this is a proud moment for India, that the Global South also got representation, that India India's G20 was an inclusive, ambitious and action-oriented one, a decisive one, and that's what India had promised for. We've made that possible in a world of challenges, world full of challenges, is what he said. He also spoke about the Israel-Hamas war. And he said that there is no acceptance for terrorism. He also said that civilian deaths on both sides are condemnable. He said that we welcome the news of release of hostages, referring to the news that came in earlier today about a possible deal between Israel and Hamas to release hostages. He also said that we are hoping for the release of all hostages because it's very important to ensure that the Israel-Hamas war doesn't really escalate into a regional conflict. In fact, in the 21st century, he said that the concerns of global South have to be given importance to. Yesterday, also in a press conference, if you remember, India's Sherpa Amitabh Kant also referred that this G20 has been about the development of the developing nations, in fact, emerging economies. The Prime Minister then today also announced the establishment of a social impact fund with $25 million from India. And most importantly, last but not the least, he addressed the issue of deepfakes and AI's negative use cases that are creating worries. Remember, just a few days back, he had spoken about deepfakes and how, it's really a challenge for people. Misuse of AI deepfakes is a challenge. He said that the countries across the world need to work together to combat those deepfakes, and AI's negative use cases are really creating worries. So clearly, all of these achievements that have been highlighted by the Prime Minister related to an inclusive G20, a decisive G20, showcasing India's rising global clout at a time when the world has gone through several black swan events, and the latest being the Israel-Hamas war. What really comes out of that G20 virtual meeting of leaders, we'll only know in a short while from now when the press conference ends.
All right, thanks Sumita for all of those details. With that, let's slip into a very short break on this edition of Market Cafe. But when we return, we'll take stock of how the Asian markets have opened up this morning. So stay tuned.
Welcome back. Thank you so much for staying tuned in. Let's look at KPIT Tech, and they're very upbeat on growth going forward. Talking to ET now, KPIT Tech co-founder, CEO and MD Kishore Patil has allayed investor concerns, and he also said that analysts' commentary on growth risks is not fully informed. He also talked about the Tata Tech IPO. Listen in to a slice of this conversation.
So, I think last 4-5 years, last 12 to 13, 14 quarters, we had this consistent growth of 25 to 30%. And we have been in a position to improve margin bit by bit. And we had talked about a few years back about the margins between 18 to 20%. And now for this year, we have guided to grow beyond 37% plus, and also margin of 20%.
There was an analyst recommendation a couple of days back, and it said that you have strong fundamentals, but as compared to global peers, even domestic peers, your valuations are a little higher. So, and they have found a certain risks in terms of some of your clients, which is including PACCAR, insourcing their some of their techniques and businesses. So a word on that, some clarification on that if you could give us.
So first thing is many analyst reports are there. There are fundamental reports that puts us much ahead than where we are today also. So even there are analyst reports of 1600 or whatever. So I don't want to go with there because I think they are more expert in their field and they take a call on the company. And fortunately, we have provided good growth over last 4 years. So this particular part about particular account and PACCAR is, I think people do comment without having a full information.
In terms of IPOs, this has been a year of bumper IPOs, and in your space, Tata Technologies has been the talk of the town right now. Do you gauge this kind of growing competition, especially in the software tech space? Yours is, of course, a niche service that you provide. Would you think that the competition here is getting tougher especially in the IPOs, new IPOs that are coming?
So there are two ways of looking at it. First is the company has been there. It is existing company. So already they are doing their business. We are doing our business. So first I said there is enough space for everyone. So the land of the law is there. I mean, we are doing our business. They are doing their business. So that is not there. On the investors side, I think there are many companies and investors have to make their choices. We have a track record and we are comfortable with that. I'm sure investors will take their own take. So there is a scope for everybody according to the way they have performed in the past as well as in future.
All right, that's the word coming in from the management at KPIT Tech. But let's get a move on and shift focus because the RBI has introduced new policies for unsecured lending. My colleague Astha Chopra had an exclusive conversation with Dinanath Dubashi, who's the MD and CEO of L&T Finance, discussing the implications of these changes on unsecured credit risk. Listen in to the conversation that they had.
All the data shows that most of the risk is in BNPL, right? The buy now, pay later, which is less than 50,000, which is about 25,000 crores totally, out of the total industry size of 10.5 lakh crores. So we believe that the risk is a little bit limited to that, and good lending, good lenders doing careful lending, and you would see across the industry over the last 6 months or so, lending has slowed down to this sector. So we believe that yes, risk is there, certainly, more limited to BNPL, more limited to the new age apps, fintech apps. What RBI has done now is increase the risk weightage. Generally speaking, if you see, generally speaking, good NBFCs and good banks are very well capitalized, and at that point of time, at least over the next 2-3 years, I don't think capital will be an issue. But it is a good way of the regulator telling the industry that look, we are watching and be careful what you are doing. And I think it's a good signal to the industry that be a little more careful. So that's.
What is your capital adequacy?
Oh, we are at 23%. More importantly, our unsecured consumer credit is just about 8% of the total book, and out of that, less than 50,000 is nil, practically, absolutely nothing.
Meanwhile, how will RBI's latest move on unsecured loans impact banks? Let's listen in to the word coming in from the top bankers in the country.
The impact is more on certain NBFCs because they have a higher threshold of capital adequacy. So maybe they might look at whether they have to raise. On the banks, I don't think immediate capital raise is required by any bank. There's no question of winding it down. So we are on record having said that our portfolio is largely to salaried people. And as long as they continue to demand, and salaried also, these are largely public sector, government, police, army, so such entities. And as long as there is a demand from them, we will continue to fulfill the demand.
As far as RBL is concerned, we have made a complete assessment of it, and we also shared with our board. We had a discussion with it. The net impact on CET1 will be around 60 bips at the end of the year. Look at September, my impact is only 60 bips. That is going to be the impact, and we will not be impacted beyond. And this 60 bips is not going to impact our plan of our growth.
Slightly higher risk weight and therefore higher capital is not a big concern from our perspective just now. No, we are not planning to go much lower. I think we are making the right choice. See, each bank has its own profile of their unsecured lending. As of now, we are comfortable with our.
All right, moving on then. Truecaller has launched its app now on wearable devices, including Android smartwatches. The company is optimistic about their India growth story, and they're planning on an expansion here as well. ET Now's Sumit Chaturvedi caught up with Alan Mamedi, the CEO and co-founder of Truecaller, to ask him more about tech threats such as voice cloning, data privacy, as well as data laws. Listen in to this conversation.
We launched our AI assistant that can pick up the calls. What we're working on right now is to use this assistant to also detect whether our AI is speaking to another AI. And it's a hard problem to solve, but it's something that we're working on because we do believe that this type of frauds will continue to grow, where scammers will pretend to be someone like a relative, or a government official, or and so forth. So it is definitely a big threat going forward, and that's a key area for us to invest in, for sure.
Many times there are concerns about data, the customers' data, the users' data. In India, definitely it's one big point of concern, and there's a law that is going to be there soon about the data privacy. How about that, the customers' data, how safe is that in your hand? Sometimes the concerns are there, their data might get leaked. What about that?
Yeah, it's a valid concern. Now, when it comes to our users in India, we have an Indian entity, an Indian company, which employs our Indian employees, but also process our Indian data in India. So nothing leaves the country. And why do we do this? We don't do it because we need to. We do it because it's a way for us to bring trust towards the community of users that we have. You know, when it comes to the new data law, we're definitely positive to it. We think it's great. We think it not only does it protect consumers like Truecaller does, but it also helps businesses. It empowers businesses to grow as well, but in a structured way. And you know, we've always had policies internally around data practices that we believe make sense, and we never collect anything that it doesn't provide any value to the consumer.
Well, that of course was the word coming in from Truecaller's CEO. Switching focus now, the government conducted a high-stakes meeting with industry leaders urging investment in thermal power projects for an ambitious capacity addition by 2031. Now, the Power Ministry emphasized on the crucial role of thermal energy until cost-effective storage revolutionizes renewables. Prakash is standing by with more details. Prakash, help us understand this better.
The Power Ministry has held an important meeting with the industry to review 80,000 megawatt thermal power capacity addition by the year 2031-32. A very significant move by the Power Ministry, especially in the context of India's growing energy demand, which is 20% higher than the last year and expected to grow further in accordance with the growing Indian economy. Power Minister has asked industry to step up and invest in thermal power projects going forward. It has emerged in the meeting that the thermal energy cannot be written off till storage becomes cost effective in order to supply around the clock renewable energy to the consumer. Government is also trying to give an assurance to the industry that they'll keep getting thermal power projects for next 5 to 7 years. In addition to that, instructions have also been given to the state governments to ensure full availability of their thermal capacity. That means government is going to add more generation capacity and so as equipment manufacturing capacity going forward. The significance of the meeting is that equipment manufacturers have also been invited in the meeting. Companies like GE and L&T have requested government to review bidding process of the projects going forward, and that is going to provide an important support to the industry, and it will also help government to add 80,000 megawatt thermal power capacity going forward in order to meet growing energy demand.
All right, Prakash, thanks so much for all of those details. Let's talk about a stock that's going to be in focus today, and that has to be TCS on the back of the buyback news. Now, the stock closed at 35.30 yesterday, up 0.6%. Let's look at the details of this buyback. The record date is the 25th of November, but today is the last day to buy the TCS stock for you to be eligible for the buyback. Now, let's look at more details about this. The buyback size is at 17,000 crore rupees, priced at 4,150 per share. That's a premium of 17.5% as compared to yesterday's closing price. The total size of the buyback is 4.1 crore shares as well. Also, let's reflect into the past and let's take a look at the buybacks that they have announced in the last 6 years. Starting in 2017, the size was worth 16,000 crore rupees. 100% of it saw retail acceptance. 2018 and 2020 also had the same figures, 16,000 crore worth of buybacks, seeing 100% retail acceptance as back. In 2022, then, they had announced a buyback of 18,000 crore rupees, but the retail acceptance here was only 23.7%. So this is a snapshot of all the buybacks that TCS has announced in the past. Now let's take a look at what the retail shareholders are getting. What's in it for retail shareholders? 15% of this buyback, or 61.4 lakh shares, have been reserved for retail shareholders. Now, who is a retail shareholder? Anybody who owns shares worth less than 2 lakh rupees, which is approximately 58 or lesser shares of TCS, is eligible to be a retail shareholder. Now, let's talk about the acceptance ratio assumptions as well. Now, this ratio could be low if retail participation is high, and if this ratio is 25%, then actual gains for the buyback could only be 5.5%. So, well, that's a snapshot on TCS's buyback. Today is the last day to buy the stock for you to be eligible for this buyback.
Absolutely, and there's a host of action in the primary markets as well. When you look at the other IPOs, you have Tata Technologies, Fedbank Financial Services, Ireda, as well as Flair Writing Industries. Let's take a look at the subscription numbers coming in for these IPOs. When you look at Tata Technologies, until 5 p.m. yesterday, when you look at their subscription, it was subscribed around a total of 6.5 times, QIB subscription coming in around 4 times, NII around 11 times, and retail subscription around that 5.42 times mark. In terms of employee portion also, you've got a subscription figure of about 1.1 times. When you look at Fedbank Financial Services, well, that one was subscribed around 38% in total. When you look at NII subscription, that was around 21%. Retail subscription around 67%, and employee portion around 37%. Switching focus to Ireda now, and as of 5 p.m. yesterday, Ireda was subscribed 4.5 times in total, QIB subscription coming in around 2.69 times, NII 7.74 times, and retail around 4.25 times. Now, in terms of employee portion, the subscription figure was near that 4.97 times mark. And when you look at Flair Writing Industries, as of 5 p.m. yesterday, in total was subscribed 2.17 times, QIB around 0.5 times, and NII 2.78 times, retail subscription also coming in at that 2.86 times mark.
All right, lots of action in the primary markets, lots of IPOs that have already opened on day one itself have seen full subscription, while Fedbank Financial Services is lagging behind, yet to see that fully subscribed mark. But with that, let's slip into a very short break. We'll bring you more stock-specific news and updates when we return. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Now, after TCS, another stock that is going to be in focus today is Cipla, because in a setback coming in for this pharma company, this company has received a warning from the US Food and Drug Administration Agency, that's the US FDA. Now, concerns have emerged around its operations in its Indore plant, and Shrishti, who tracks the sector closely, has more details on this. Shrishti, take it away.
Well, yes, days after the warning letter was issued to Cipla's crucial Pithampur plant by US FDA, we have the details out wherein they really don't look good, because US FDA has highlighted data integrity issues for Cipla's Pithampur facility. This one is really crucial because Pithampur plant on an overall basis contributes around 30% in the top line, and one of the key products from this particular facility is the albuterol sulfate, wherein US FDA has said that they have flagged off the product complaints related to this particular product, as well as microbial contamination, and investigations into the quality deficit complaints of albuterol sulfate inhalation aerosol were inadequate. There were more than 3,000 complaints, and the kind of a reply that Cipla has given US FDA is not satisfied for that, and US FDA observed that the company failed to extend the investigations to other potentially affected batches. US FDA seems unsatisfied of the practices as well as the CAPA. Other than that, they have asked the company to take a third-party consultant. They have also asked some data going back to the few years, and investigators observed a truckload of the bag of the scraps from the unit as well as bag of the scrap from their central scrapyard intended for shredding, though company has gone ahead and said that they have implemented new procedures for the document disposable. However, US FDA is not satisfied with the reply. Along with that, the warning letter also talks about the repeat observations at the Goa facility. So these were the points highlighted by US FDA, really not looking good for Cipla as of now. But going ahead, if there is an import alert for a particular drug, that could be a big concern for Cipla.
Well, thanks, Srishti. Let's switch focus to brokerage notes now. And we have notes coming in from Citi as well as IFL Securities this morning. Gaurav is standing by with a roundup of what they have to say. Gaurav?
Right. Is CG Power. Now we all know that CG Power is foraying into semiconductor space, and IIFL has come up with a note now with a buy rating, and they are targeting a price of 530 rupees for the company. Now what is happening is that they believe that semiconductor space is actually profitable and it is a huge opportunity for the company going ahead. They are expecting free cash flow to be in the range of 2400 within the next 2 years with this opportunity for the company. And despite being a capital intensive space, because of the government's incentives, they are expecting the profitability to be somewhere in the range of 20 to 30% from the space itself. With this, they are also seeing a potential upside of 60 to 70 rupees on the target price. But for now, they are keeping the target price of 530 rupees for the company. The next one we have is Jubilant Food, where CLSA has maintained its sell rating with a target price of 502 rupees per share. Now we all know that Jubilant Food is dominant with the Domino's brand in the pizza segment. But with the new entrants coming in, they are believing that this is becoming challenging for Domino's to keep their market share, and they are also seeing some risk in the fixed cost component of Domino's, and because of which there could be a negative surprise in the profitability coming ahead, and that is why they have maintained sell rating with the target price of 502 rupees per share. Apart from that, we have also CLSA talking about the India earnings scenario in 2Q FY24. So they believe that earnings were actually better than what the street was expecting overall, with the domestic focused companies outshining the international focused companies. They mentioned that the growth was actually led by PSU oils, financials, metals and cements, while IT and consumers were also the sector which actually dragged the growth in 2Q FY24. They also believe that urban linked stocks were actually profitable. They increased the revenue, while the rural focused stocks actually increased the profitability for the companies. With this, consensus reiterated the Nifty EPS, and they have upgraded the EPS by 1.5 to 0.5% over the next 2 years, while CLSA is being a little contra with this, and they are actually downgrading the Nifty EPS by 0.7 and 1.5% over the next 2 years. So specifically, they are now asking us to keep a track of banks, autos and commodity stocks, as they could be a key driver for growth going ahead.
All right, Gaurav, thanks for all of those details. Lots of stocks to keep your eye out on the back of those brokerage notes. But now I'm being joined in the studio by my colleague Ansh. And Ansh, weekly expiry today, and Nifty, we've been seeing that it's still around that 19,800 mark, struggling to actually breach 19,850. So what's the F&O setup looking like, and what do you think about the Nifty levels as well?
Yes, right. So Nifty is actually around 19,850, and this is for 6th consecutive session that it's trying to breach that level. A similar incident had happened in mid-October as well, when Nifty was around the same level for 5 to 6 session. Post that, it gave a correction of 1,000 points. Now, will that repeat or not? Only coming sessions can give us some idea about it. Let's see what happened in F&O segment. Long build-up was seen in Nifty futures, with open interest increasing by 2.5%, keeping the sentiment positive. Whereas on option front, we saw very active call writing at 20,000 strike, which means traders are expecting Nifty to take resistance there. Now, despite we are talking about a resistance, this data still seems to be a bit positive, as earlier strong put writing used to happen at 19,800. Now it seems to have shifted to 20,000 mark, which means traders are less confident on 19,800 to be the strongest resistance in the market. Now let's shift our focus to what FIS did. In index futures, they added 3,000 long contracts, due to which total long positions have inched higher from 21% to 23%. So in a nutshell, overall data seems positive. But again, the same bottom line, Nifty has to decisively close above 19,850-900 level to overcome the bear zone.
Well, thanks, Ansh, for that very detailed roundup. And it is the first ever earnings report from the Mamaearth parent Hunasa Consumer. A healthy set of numbers indeed, wherein profits have doubled to 30 crores. My colleague Winnie is standing by with more details. Winnie?
Yes, good morning. And talking about Hanasa's numbers, seems like the top line, managed to see a 20% growth. They do have the top line, that's the revenue, came in at 496 crores versus 410 crores last year. Profits of the company also almost doubled, 29.4 crores versus 15 crores last year. So 94.95% uptick on a year-on-year basis. Margins, a strong expansion on the margin front as well, 8.1% versus 6.4%. So good in terms of the operational performance also that the company is seeing. And in terms of the volume growth, that came in at around 27% for Q2, which is obviously more of a volume-led growth that we're seeing this time for the company is what it's highlighted, because 27% is the volume growth for the company. Like-for-like growth for the continuing business is coming in at 24%. Let's not forget, in March 2023, they had taken some adjustment in terms of impairment for that Mompresso business of theirs, which was not doing well. So yes, in March 2023, all those things were considered. So on a like-for-like basis, when you compare versus last year September quarter versus this year September quarter, yes, like-for-like basis, you could say the growth is for the business is at 24%. Employee cost obviously has seen a reduction because Mompresso businesses shut down as well by 5%. New products now contribute around 13% for the first half of the year. 13% contribution coming in from the new business as well. Also, the company is highlighting in terms of increasing in terms of value market share for the company. 50 basis point in terms of shampoos as well as 100 basis point in terms of face wash is what they've seen an increase in. And Dermaco, Aqualogica, Dr. Sheth's, all of them are continuing to see a very strong performance as well. Dr. Sheth's as well as B Blunt are seeing very, very strong growth. Dr. Sheth is up by 30 times since the acquisition, and ARR is at 150 crores, while B Blunt is also seeing a strong trajectory as well. On the back of this, Jeffries has actually upgraded the EPS by 5 to 6% after the company's earnings came out, reiterating a buy and target price of 530 rupees per share.
All right, Vinny, thanks for that fine print, and all eyes will be on that stock on the back of their results. But with that, I'm afraid we're completely timed out on Market Cafe today. It's a goodbye from Shreyansi and me and the team that put that show together. But you don't go anywhere because the market takes all the action.